Hello, welcome to the very first Buy, Hold, Sell with me, Adam, host of Comedian V Economist podcast and widely regarded as one of the simplest minds in finance. Each week I'm joined by an actual expert though to educate me and hopefully you on how they're thinking about stocks and the stocks they're thinking about. It's rapid fire though, it's 20 minutes, 10 stocks, one choice, buy, hold or sell. And we will put our money where our mouth is. We'll be tracking each stock on the Equity Mates website so you can see how things pan out, good, bad, or otherwise. But remember, this show is for education and entertainment purposes and is not intended as personal investment advice. While our guests are licensed financial professionals, they are not aware of your personal financial circumstances. Any advice they give is general advice. These opinions are given at a moment in time and may change as the facts change. So ensure you're doing your own research and if you feel you need it, seek professional financial advice. But let's crack on. Today I am really excited to be seeing him again. I'm joined by Adam Dawes, Senior Investment Advisor at Shaw & Partners. You can never have too many Adams in the room. Adam, how are you?
You can never have too many Gregs in the room, but Adams I'll take as well, so no problems. I'm really well, thanks, Adam. How are you?
I'm doing really well, thanks, mate. It is nice to see you again. For those that remember FinFest, almost a year ago to the day, Adam and I did a buy, hold, sell live session at FinFest, which standing room only, I think, from memory. Adam, wasn't it?
The only one. Yep, the only one. Standing room.
All right. Look, Adam, before we get started and jump into your picks, I'd like to do a bit of an icebreaker. I'd like to offer you a drink from our in-house bar. It's a bar I call the No Holds Bar. And luckily for you, we have every drink in the world. If I could offer you one drink, Adam, what would it be?
Would you judge me if I said a pina colada? But
Pina colada?
I'm not going to say a pina colada. I'm going to say a tequila old-fashioned, please.
A tequila old-fashioned. Mm-hmm. Lovely. Do you have a particular tequila in mind when you're thinking about your tequila old-fashioned?
Anything Reposado or Añejo, and obviously, look, it's a drink that you can basically have at any time of the night or day. It's a very good one. It's a lot of straightforward alcohol, and that's exactly
right.
what it should be.
A nice breakfast drink, perhaps.
Yeah, why not?
Hey, why don't we get stuck into it? We've got 10 stocks to get through, and we're going to start with one of the big end of town. We're going to start with BHP, ASX BHP, currently $43.27. Of course, most well known for making potash, among other things. But I hear they're branching out from potash now. Adam, what are they up to these days?
Look, so BHP, obviously one of our biggest diversified miners, but they recently just bought Oz Minerals, which is a copper mine. And
right.
We're really liking copper at the moment. It's structurally in deficit. So in other words, if you look at how many tons of copper it takes to make solar farms, wind farms, those kinds of things, it is ridiculous. Certainly lithium is one of those ones, graphite is another, but also copper. And it's not really well talked about, but we do know that the market will be in structural deficit for the next 2 to 3 years, and hence why we really like BHP in there for their copper assets.
Right. So you're going to have to help me out here, Adam. So when you say structural deficit, what does that mean?
It means lots of people need copper to build lots of things,
yep.
And basically, that will be structurally in deficit. So in other words, there's no new mines being opened up as far as copper mines. There's no new ones coming out. It's very expensive and hard to get it out of the ground, but we need it for this transition of this energy transition world where we're moving to more solar, wind and all those kinds of things. So it is needed. It's hard to get out of the ground, and hence why we like BHP as well.
Right. All right. And so BHP, sorry, that's a buy for you?
Buy. Yeah, absolutely.
That's a buy.
Yeah, definitely.
It in. Brilliant. All right. Next one, we've got another miner. Sandfire Resources, ASX SFR, currently $5.78. Buy, hold or sell for you, Adam?
Again, this one's in the copper space, so I've got a bit of a theme going here.
You're just going long copper. Anything to do with copper, absolutely. You're all over it.
Just wherever you can get it. Now, Sandfire's got a couple of.
I got some mates that have been grabbing some copper just out the back of an old tyre factory. So, if you want in, I can cut you in.
Absolutely, bring it on. I'll take it. I'll just grab my backpack and we'll get some going. No, look, Sandfire is one of those ones where it is, again, a little bit different. It is a copper producer, so you certainly want there. But when Oz Minerals was taken off the boards by BHP, we saw a lot of money flowing into Sandfire because BHP is obviously a diversified miner, so it's got lots of different metals mines in its group, whereas Sandfire is basically a one-trick pony, which is copper. And the stock has come off from sort of $6.50, $7 down to sort of, what did you say today, 5 something?
Currently 5.78, yeah.
Yeah, so it looks really good, sort of really attractive on that side, plus also those issues that we talked about, sort of that structural deficit of copper. So Sandfire is a little bit tougher, but still we really like Sandfire as a business, so it's a buy.
Okay, the next one is Woolworths Group, ASXWOW, currently $36.95. I did see they announced a new type of mango just in time for summer, so that would have got investors talking, no doubt. Where are we at with Woolworths? Is it a buy, hold, or sell for you?
Look, this one's a hold for me at the moment.
Okay.
Obviously, we've stopped seeing $10 head of lettuces and all those issues that we saw with supply chain issues. But we know Woolworths is very, very good at what they do, and they are able to sort of, squeeze the supplier a little bit. Now, you might not be too happy if you are a supplier. They can squeeze the supplier, but also they can ratchet up their prices a little bit with the goods that you buy. One of the things that we have seen is a very large trend towards home brands. And certainly Woolworths and Coles are very, very good at that home brand side of things. So as cost of living goes up, but also, obviously people can't spend as much in a cafe or restaurant. They have to buy more goods and eat at home. And they're also going for, we saw increases in pasta, corn, flour, those kinds of things, which means people are starting to make things at home as well. So Woolies, I really like at a sort of a lower $35 or $34. So we've got a little bit further to go for it to come back into that buy territory, but certainly hold the best supermarket. And one of the things that we're going to talk about today is buying quality. You always pick up good quality businesses when they're down, and certainly Woolies at around that sort of $34, $35 would definitely be a buy for me. So it's a hold at the moment for the supermarkets and Woolies.
All right, next up we have got, we're looking at property. Goodman Group, ASX GMG, $21.11. No relation to Saul Goodman from Breaking Bad, I don't believe. Goodman Group, Dawesy, where are we at with Goodman Group? Buy, hold, or sell?
Look, this one's a buy because it is the best in class. And we talked about that a second ago. The best in class of a business, the best business that you can actually get is Goodman Group. Goodman Group does industrial property, so it's not like office property, or it's not retail, or it's not shopping malls, supermarkets, those kinds of things. It's industrial property, and industrial property is always future facing forward. In other words, they're doing a lot of data centers at the moment. They helped Amazon, they helped Google come into Australia with very large footprints. They're able to put these things in, and the industrial side of things is always continuing to go higher and do very, very well. As interest rates rise, you saw all of the property sector start to get hit, but Goodman Group was going the other way and continues to move higher. So Goodman Group is the best in its class, and it's a buy from me.
I didn't think the AI hype cycle would reach industrial property, yet here we are.
Here we are, absolutely. I mean, they've got especially some of their industrial areas, because within data centers, you actually have to be close to hubs, or you have to be close as data moves around for the speed to happen. And and because Goodman Group's got so many good industrial parks, they're converting some of those parks into data centers to allow that to happen, and that's a huge uplift for Goodman Group going forward.
Okay, next we are looking at lithium and Liontown Resources, ASX LTR, currently trading at $1.81. Are we bearish on Liontown, Adam?
Well, if you've been living under a rock or in a cave for the last week and a half, you would not know what's happened with Liontown, but Liontown has just said Albemarle, which is a very large US lithium conglomerate, just was going to take this stock over at $3. And Gina Reinhardt, one of our famous ladies over in WA, went out and bought 19.9% of Liontown 3 weeks ago to basically stop or to cause some problems
Yeah.
with Albemarle coming through and wanting to buy Liontown at $3. So what happened is that they turned around, and Albemarle, as of sort of end of last week, turned around and said, "Oh, it's all too hard. We can't do this anymore. We are getting out of taking over Liontown," and hence the share price is now back down. What did you say? $1.80?
$1.81, yeah.
Yeah. So look,
Right.
this is a sell. Okay.
It's a sell. Okay.
Yeah, if you've got Liontown, and this will hurt a lot of people that potentially bought it closer to $3. But this is a sell. I think that overall, unless Gina comes out with a real indication of what she wants to do, potentially she can pick this up at a lot cheaper prices, because she bought 19.9% of the company at $3 as well. So she's hurting.
So why did she do that then? If it's scared off the takeover, and now the share price has gone to $1.81, why? Was it a mistake? Did she accidentally? Was it one of those big nights where you're out and about and you think, oh, I might buy a lithium miner? That's the kind of thing I imagine happens in the world of people like Gina Reinhardt. Is you have one too many, and next thing you know, you've bought a lithium miner.
Yeah, exactly. When you're the richest woman in Australia, what have you got to do? Hey, what have you got to spend money on? So I think. Sorry, Andrew Forrest did this with Western Areas when IGO took it over. IGO then, as Andrew Forrest was a bit more of an antagoniser in there, he was able then to lift up the bid. So in other words, get more money out of IGO. IGO lifted the bid, paid the money, and then Andrew Forrest got a couple of extra $1 million, whatever, for that position. I think Gina was looking for that as well. She thought Albemarle might come through and lift their bid and allow that to come through. But Albemarle, was in there for 4 weeks plus another week extension. So there was 5 weeks they were doing due diligence on the business. Right. And they couldn't really... And it's a long time for a company to sit there and, look at all the numbers and do all the spreadsheets. And then they walked away. So there must have been something in there that spooked them. It must have been something... It's really annoying for shareholders that hold Liontown, because they were hoping for a $3 plus takeover, and that would have gone through. Liontown is a very good business, but potentially you'll see this thing come down to $1.50, $1.30, and then we can slap a buy on it. But at the moment, they've got to raise capital, and it's an issue, and we could go on for 15 more minutes on this one. So I'm going to leave it at that.
It's a sell. We're going to leave it at it's a sell for you.
At the moment, it's a sell, definitely.
Okay, brilliant. Right, next one we've got is Pilbara Minerals, another lithium miner, ASX PLS, currently trading at $3.58. Adam, buy, hold, or sell on Pilbara?
So one of the things, and we know that this is not advice that I'm giving everybody, but however, you could roll your Liontown into a PLS or a Pilbara Minerals. Pilbara Minerals is one of the best run lithium deposits here in Australia, in WA. Very, very good. They've got a truckload of cash, when I'm talking like a lot of cash, and next year they'll have even more. The lithium stocks are all getting hit at the moment because the lithium price has now started to come down a little bit, and there's a little bit of talk of being oversupply. I don't think that's going to be the case. I think PLS is the number one pick that we're buying at the moment in the lithium space in the market. So, I'll reiterate that one. That's a buy.
That's a buy. Because I did feel like we had the copper boom, and then it seemed like we had the lithium boom, but now we're saying the lithium boom might have been replaced by the copper as the new lithium after lithium was the new copper.
If you can keep up, yes. No, the lithium's definitely come back, and it's totally understandable, because you've got all this stuff that everyone thinks is needed to be built, and there was this sort of, we need to get down to net zero by 2030, 2050, but now there's talk about that being extended out a little bit more. The demand isn't going to be there as much. I still think that lithium is definitely going to be needed across the board. There's that many batteries around there. PLS is probably our number one pick in the space.
IPD Group, ASX IPG, interestingly. Currently $3.85, sufficiently vague. I like it already. What's IPD Group all about? First of all, buy, hold, or sell?
Yeah, so at Shaw and Partners, we've got a buy on this one. I've been buying this one for clients as well. It's actually come back from $5 over the last sort of 4 to 5 days, even longer now. This week, it's really come back. which gives us the opportunity to start topping up clients as well as buying this one. But IPG or IPD Group, which is IPG, the stock code, IPG is a business that's in electronics. They've got some very long customers, or long as in customers that have been with them for over 25 years. But the real reason why we're really starting to buy this one is that IPG makes electronic vehicle charging stations. And as we know, with all of the electronic vehicles that are out there, we're selling around about 3 million electronic vehicles per year in Australia. It doesn't sound like a lot, but when you've got 28 million people, 3 million is actually quite a lot, and that's set to double or increase over the next 2 to 3 years. But the issue is that we have a lot of range anxiety here in Australia. Obviously, you get an 8-hour drive from Sydney to, Brisbane, Melbourne, Sydney, or 10-hour, 12-hour drives, which is nothing for us. But if you don't have anywhere to charge your vehicle, you're not going to drive and do those kinds of things. So IPG is working out a solution to be putting charging stations around Australia in the different locations in CBD as well as outside of that. That is going to go for the next 5 to 10 to 15 years of that build out of that infrastructure. And that's why we really like IPG at the moment, so it's a buy.
That's a buy. All right. So we've got lithium, copper, and charging stations. I'm noticing a bit of a theme going on here, Adam.
Future-facing metals. Future-facing commodities.
Okay.
That's exactly
I'm
right.
I'm learning. All right. Next one we got is Amaero. I hope I said that right. Amaero International, ASX 3DA at just 23 cents. Even my kids could afford to load up on Amaero. What's Amaero?
So it's a buy. This one, be very careful. It is quite speculative. But it is a business that makes titanium powder, and that titanium powder is used in a lot of space, Raytheon, Boeing, all of these kinds of businesses. Now, they were going to put a production plant here in Melbourne, in Australia. They went to the United Arab Emirates, and now they've moved it to I'm going to say Tennessee in the US. Now that move has been absolutely fantastic for the company, because now they're closer to those big defence contract businesses to then supply that titanium powder to allow that for very specialised defence rockets, defence those kinds of things. So it's a fantastic little business. Hank, the managing director, has done very, very well in getting this one to where it is today, which it should then certainly move forward. The overall valuations are actually quite large when you actually look at seeing if some of these contracts do come through. It is speculative. It is around that sort of, as you say, 20 cent mark, 24 cents. So just be careful. But that's my real specky play for the buy, hold, sell, and it's a buy.
It is now time for the big call. And this week we're looking at a couple of companies for your big call, Adam. Let's start with Resmed, ASX RMD, $23.35. Resmed. Is this a case of you snooze, you lose?
I like it.
See what I did there? See what I did there?
I do, absolutely. I saw it. Hopefully everybody else gets it, because it might be you and me in a podcast.
I am painfully predictable and obvious.
So Resmed is a sleep apnea business.
Yep.
And so that sleep apnea business has, and a lot of healthcare stocks, but sleep apnea has definitely been hit very hard. Now, when you get these good quality blue chip stocks down 35 to 40%, you've got to look at this and say, okay, is there something wrong? Is it structurally, is there something wrong? Or what's happening? And now what's happening with the healthcare space at the moment, there's this very large drug called Ozempic, which is
I heard about that. We were talking about it on our show this week as well. I think everyone's talking about Ozempic.
Everyone's talking about it, and it's really hurting Resmed, because what happens with sleep apnea, you snore and you lose breath. That your brain you don't get breath to your brain, or get oxygen to your brain, and then from there you have heart issues, you have all these other issues, and you stop breathing, and it can be up to like 50 times a night that you would stop breathing. So what happens is Resmed's got a great Darth Vader mask that you put on your face, and it allows that oxygen to flow into you, and then that disease is medicated by allowing air to go through. However, what's happened is that if you lose weight, you don't snore as much, or you don't have any heart problems and those kinds of things. And so Ozempic has been taking the market share or the lunch away from Resmed. Now, I think that that's incorrect. We've done numbers that it'd be about 7% of Resmed's revenue that could actually be taken away, which is there's billions of people that are undiagnosed with sleep apnea anyway. So I think it's been overdone, and that's why it's one of those big calls that you should be buying some Resmed at this time.
Right, and is potentially Ozempic, there's a lot of hype about Ozempic, like it's still relatively new, right? Like we haven't really seen long-term results of Ozempic or how it plays out. I've heard about Ozempic face, which is apparently what happens to your face starts to sag a little bit and things like that. So who knows? It still feels...
Well, yeah, I mean, you think about it. I think it's about you're on for $15,000 a year, and you have to be on it for the rest of your life. And it's a shot that you sort of take. So it's been made for diabetics. But the idea is that the diabetics increase their insulin, but when you're normal or healthy, somewhat normal or healthy, then as those insulin levels rise, it means that you don't eat as much, and so you feel full, and then you can start losing weight. But that also then goes through to other sectors, like you stop drinking. There's airlines will benefit from it because then the rest of the population is lighter, so you don't use as much fuel, and so you can get around. So this drug is actually, there's a lot of winners and losers out of this one, but I think Resmed has been overdone on the downside.
All right, so that's a buy for you. Finally on the show, we're looking at CSL Limited, ASX CSL, $236.38. Adam, buy, hold or sell?
Again, this is a buy, right? Because it's been taking a beating, getting smashed on the back of this Ozempic, because they do a lot of kidney diseases, and the whole idea is if those kidney diseases aren't going to happen, that could also then put a real large effect on CSL. Remember, CSL is our best healthcare stock on the market. Now, you might say at $200 or $300 plus, that's far too expensive. I hear you, but if you're looking to put a portfolio together, CSL is one of those stocks that you want in the portfolio because it is the best, and it is only the best as far as what we've got. Again, been over exaggerated on the downside because of these new drugs that are coming out on the market. CSL is definitely a buy from me.
All right, it's a buy, and that is the final one for the day. Well done, Adam. Thank you for being part of Buy, Hold, Sell. Yeah,
great to be here, and I'd love to come back anytime.
Well, we'll definitely love to get you back because we're going to track the stocks on the website. So we'll get you back on and we'll review in, 12 months and something like that and see how we go. But I really appreciate you jumping in for the first edition of Buy, Hold, Sell. It's been great to have you on.
Thanks, mate. Have a great afternoon.